James Nixon is her co-chief European economist at Societe Generale. James, good morning to you. This was a short-term positive. It seems like a very short-term positive. How do you feel about it?
Well, I don't think that's not exactly fair. I mean, it's a huge program. It's very impressive, both in its scale, its sheer size, but also in its comprehensivity. Now, that doesn't mean to say that there aren't still some very significant questions about how this is going to work in the long term, where the money is going to come from. And I think, inevitably that's going to be tested. So this is going to be a game we play, if you like, over months and if not years to come.
Now, it showed huge cohesive support for the euro, which is obviously very positive. But is this a problem that can be solved by liquidity?
Well, liquidity is obviously an element of this, because if liquidity dries up, then the whole financial system sort of grinds to a halt. And as we've seen after Lehman, that would be extraordinarily negative for growth. What this does is it buys time for countries to basically put their fiscal house in order and get back onto sustainable trajectories. And that's his biggest weakness, because at the moment nobody knows really whether this is going to be time consistent. It's all very well for the ECB to agree to buy bonds now. Will they do the same in 6 months' time? Because as soon as they stop, we're going to be right back to square one.
And of course, the structural problems in Europe persist, don't they? I mean, this package doesn't buy jobs for young people in Spain or indeed help the Greeks to cut their deficit.
No, absolutely. We still have a huge problem with competitiveness, lack of productivity, particularly in southern Europe, and that's something that has to be addressed. I mean, I think more positively, what I would say is when you look back at, for example, some of the previous, turning points in the global cycle. You look back when Mitterrand was first elected, they came in with a program of extensive fiscal spending and were quickly forced to reverse that and impose austerity. Exactly the same thing happened with Clinton and Rubin in the United States. And it may be that we're at one of those pivotal epochs in the economic cycle. Clearly, if you like, the era of large S, of large fiscal spending is over, and what we now face is a long-term effort to, impose austerity and fiscal consolidation.
Indeed. Now, it has been said that the very size of the war chest, if you like, means that it's not going to be needed. We've seen Greece just a few moments ago ask for the first tranche of the EU IMF bailout. That doesn't come as any surprise, I presume. But what happens if the very countries that need to put this money up aren't able to do it? I mean, what happens if the call is actually made?
Well, I think there are two things here. I mean, one is inevitably, from the financial markets point of view, it's like a game of poker. If there's money to be made because you think the other side is bluffing, then we're going to call. And I think that is going to be the process that we see over the next couple of months, probably. Slowly, whether there really is the will to impose this package is going to be tested. Ultimately, if we arrive at a situation where the European sovereigns are not able to finance themselves on the marketplace, not able to issue the debt for this, then I think you do have to come back and consider the nuclear option and look for the ECB to actually print the money to finance this.
I thought the nuclear option was yesterday when they said they'd buy the bonds.
I mean, no, because bluntly, they are buying bonds, but that is going to be sterilised. I think the reality is they'll only be buying bonds in relatively modest amounts. Nobody's talking yet about printing money, running the printing presses. I think the nuclear option is still fundamentally out there.
So it's still out there. Now, obviously, a lot of the kind of fiscal regulation wasn't imposed in the past. Is that going to change this time round, do you think? Is that a price that Germany is going to exact for being part of this deal?
I think there will be, reforms on the fiscal side. I personally think that it will not be in the direction of imposing more penalties. I mean, it was never sensible to suggest that you were going to fine a country that was already hopelessly in debt.
And it never happened.
I think what we will see is much greater effort on, firstly, coordination, as we're already seeing. I mean, that's clearly going to be the case. So efforts will be to coordinate fiscal policy. There's also going to be a lot more effort on scrutiny and actually monitoring of these deficits on a literally on a quarterly basis as we watch the figures coming in.